How's it going, everyone? Welcome back to another dividend investing video. Another month has ended and it's time to provide an update on the dividend growth income portfolio for the month of March as we close out the first quarter of 2023. I'll go over the stocks we purchased and the growing dividend income we received. The portfolio is now just over 6 months old. We just had a record month for the portfolio so far. I'm eager to share the growth of this fund with you guys. Things are really starting to take off and it's getting exciting, so let's get into it. I'm Nick, and this is the Dividend Growth Income channel. Thank you for joining me today. I'm not a financial advisor or guru. I'm just a regular guy who wants to share my love of dividend growth investing and building financial independence with passive income. If you could, please do me a favor, smash the like button and subscribe to keep up with future videos. This helps us out more than you can imagine with the algorithm, so we can bring you more quality dividend investing content. If this is your first time watching one of our portfolio update videos, let me briefly share what we're doing. We started this portfolio in mid-September of 2022, just over 6 months ago, and a few weeks after we launched this YouTube channel. We are using Fidelity as our brokerage, and I wanted to build up a portfolio starting from scratch, making small but consistent weekly contributions to build up some passive income, using the YouTube channel to follow along with that. The beauty of dividend investing is that anyone can get involved, but it takes consistency, time, and consistency. Now on Wednesdays, I make my weekly contribution. I am dollar cost averaging from a selection of 3 ETFs and 24 dividend stocks, most of them dividend growth stocks. Now since launching this portfolio, purchases have been made every single Wednesday. I also have all of my dividends on drip, which means that they redirectly invest into the securities that paid them, further helping us roll that dividend snowball. 6 months in, the value of the portfolio has grown to over $6,000, over halfway to that 5-figure mark. Okay, here's my dashboard page and my portfolio tracker I'm building in Google Sheets. Well, so far we have invested $6,200 of cash in the portfolio, and on top of that, $49 in the dividends we received, and about $1.50 in interest that has been invested, for a total cost basis on our portfolio of $6,250.48. Investing this money, it's grown by 1.55%, with an unrealized gain of $97.03. By unrealized gain, I mean this is how much money has grown from our investments. But since we haven't sold it or locked that in, it's not a realized gain. It's not locked in, and this will still go up and down with the market until these securities are sold. And my intention is to not sell these. I just want to collect the dividend income and hopefully pass them on to my child. Now the yield of the portfolio is sitting at 3.18%, but the yield on cost is just over 3.2%. We hit a cool milestone this month and built up an account that's paying out over $200 over the course of the next 12 months. We call this our forward annual income. Lots of investors call this their PADI. And so this is how our yield is calculated. The current yield is taking the forward income divided by the market value of the portfolio. And then the yield on cost is determined by taking the forward annual income and dividing it by the cost basis. So yield on cost can be thought of as yield on deposit or your yield on your initial investment. Now that we have over $200 annually in dividends in this account coming in, we can also think of this as $16.79 per month, or $3.88 per week, or 55 cents per day. And getting this to $1 a day, getting $365 of dividend income, forward dividend income. Right now we're 55% of the way there. I have these trackers here to show, and that's really my goal for 2023. Then hitting this $100 a month, that's really my goal for 2024 in this account. I think we're well on track to get there if we can keep things going at the level we're at or better. Okay, let's bring up our contributions tab. This simply tracks when I've added money. In the month of March, we had 5 Wednesdays, and just as I did in January and February, I added $250 to the portfolio each time. Look, I've set a contribution goal of $10,000 into the account for the year. $200 a week would get us there, just over that. So I'm very glad I'm able to outperform my goals so far. This is either going to let me crush my goals, or if things get difficult later in the year and I'm not able to allocate this level of resources to the portfolio, there's a little bit of slack that'll help keep me on track. Now we're 13 weeks down out of 52. That's exactly 25% of the way through the year, but we are at 32.5% of the way to our goal for the year. So hopefully we can keep this up and crush it. The plan for April is to stick with $250 a week, and I'll scroll down and show you how we started in the portfolio here. When 2023 kicked in is when I decided, we've been consistently doing about $200 So let's bump that up by $50 so we're able to at least keep a realistic, attainable goal and make some progress. My strategy every year is going to be to allocate a little bit more resources towards this account for these next stretch of years in order to hit these goals we have. Okay, I'm going to switch over to the Fidelity website. This is the easiest way I can show you all the purchases we made with our $1,250 contributions in March. Okay, on March 1st, I added $250 to Fidelity. I purchased $20 of 12 different stocks. That's AT&T, Agri Realty, Amgen, Automatic Data Processing, Chevron, Home Depot, Kinder Morgan, NextEra Energy, Procter & Gamble, United Healthcare, Walgreens Boots, and Waste Management. With the remaining $10, I added to my VOO position. And look, I bought VOO every week this time. I've been doing that all year. Now the next week, February, March 8th, I added $250 to Fidelity and purchased $20 each of the following 12 stocks. We had Medtronic, Aflac, Best Buy, BlackRock, Broadcom, Cisco, Comcast, Kroger, Lockheed Martin, Main Street Capital, Mondelez, and Snap-on. Of course, my $10 into VOO as well. The next week, Wednesday, March 15th, I added $250, kept it simple. I just added to my ETF positions, $100 to SCHD, $100 to VYM, $50 into VOO. So for Wednesday, March 22nd came, and Fidelity got another $250. I put $20 each into the following 12 stocks: Aflac, Agri Realty, Amgen, Automatic Data Processing, BlackRock, Chevron, Home Depot, Kinder Morgan, NextEra Energy, United Healthcare, Walgreens Boots Alliance, and Waste Management, and of course $10 to VOO. Then finally, Wednesday, March 29th, we added the final $250 for March, and for Q1, I put $20 into each of the following 12 stocks: Medtronic, AT&T, Best Buy, Broadcom, Cisco, Comcast, Kroger, Lockheed Martin, Main Street Capital, Mondelez, Procter & Gamble, and Snap-on. And of course, $10 into VOO. All right, back to my spreadsheet. Here is my portfolio view page. It allows me to easily sort through my holdings however I like. Here it's sorted by ticker alphabetically. But the main way I like to see this is by weight. It tells us where we are heaviest, sorted by what we have the most of. Now, as always, my 2 dividend ETFs take up the top position in this fund, and if you expected anything else by this point, you're going to be disappointed. I continue to be astonished at how closely SCHD and VYM are performing. I've invested just under $600 into each, and that includes the dividends they paid out. I've been adding money to them in equal amounts at the same time. One is up 0.1% and the other is down 0.1%, and their values currently, they're within $1 of each other. Now my S&P 500 index comes in next. I have this fund in my portfolio more as a benchmark. It's a place to invest money and know you're going to get matching market returns. It provides a way to compare against everything else we're doing. I've been buying this weekly. We now have almost $500 worth of VOO in the account. It's up almost 5%. It doesn't make a whole lot of dividend income, but it does yield 1.5%. And the S&P 500 does have decent dividend growth. Over the last 5 years, the dividend for VOO has grown at a rate of 6.36%. To me, having money in this is just a no-brainer, and I continue to stress this in my videos. And if you look at the other 24 stocks, we've invested $190 plus dividends into each of them so far. Let's sort this by performance, which will be similar, but it's going to move the ETFs into place relative to how they've performed. Now, 2 of our tech stocks have been our best performers. We've got Broadcom and Cisco. And I was suggesting Broadcom as a good investment back in November when it was dipping below $500 a share. And look, thanks to fractional shares, I've been able to build up a position here in Broadcom. Notice we don't even have the full share yet, but we've grown our investment by $34, up 18%. And we've collected $6.48 in dividends in addition, so Broadcom has been great for us. It's going to be nice to finally get a full share of this one, but at this price, it's going to take some time. Now, other good performance we have Comcast at 9%, Mondelez at 8%, Kroger at 8%. If you've been following the channel, I was recommending Kroger back in January, February, when it was in that $44, $45 range. I like it here too, but at this level, I would call it more fully valued, fair valued. Definitely would not mind to see Kroger go back below that $45 mark. This is one of my favorite dividend stocks right now. And let's see what's underperformed. Really, these are the ones I'm most excited to keep adding to. Walgreens continues to be our worst performer, down 9%. It's also one of the top yielders in the portfolio. One of the stocks I bought more for income than dividend growth. They're a struggling company, but I am betting on a turnaround. We'll see. Hopefully I'm right on that. Now next, we have United Health Group. It's down about 8%. This is the stock that trades at a premium, so I'm not going to call this one cheap, but it's cheaper than we've been able to buy this high-quality healthcare company. Nothing else is down that much. ADP and Amgen both have recovered over the last month some. Noticed half of the stocks are green, half of the stocks are red, but only a few have moved a lot. And overall, the portfolio is positive, but I'd be okay to see stocks fall further. So that's where things stand. I am pleased with how it's built up. There's positives in both. When it's red, you feel better about buying it, but when your portfolio is green, you like to see your money grow. And we can sort this in some other ways too. For instance, if I sort by industry and then by sector, everything here is nicely grouped by sector, and it's a quick way to see our diversification, We can also sort by dividend yield. It shows us that Main Street Capital is our highest yielding holding in the fund, while United Health is the lowest. Also, I'm tracking the annual income these bring in. So if we let this portfolio as is over the next year, SCHD would be bringing in $20. VYM would bring in another $18. And our forward annual income is $201.52 at the moment. Let's take a look at how that is paid out throughout the year. Okay, here we are on the forward income tab. This shows us what we can expect to receive in dividend income over the course of the year as the portfolio is right now. As this is an ETF heavy account, and most of our stocks, they also seem to pay in the months of March, June, September, and December. Those are the strongest months. We've got this hitting that $300 per month mark in those months. Now, January, April, July, and October is going to hit double-digit threshold over the next month as well. In April, we're looking to get about $10 in dividends. In February, May, August, and November are our lowest months, our slowest months, but only a few companies paying then. But of course, these amounts are all growing every week when I buy more stocks. Let's look more at the dividend income we received in the month of March. This was a record month for us, by far. Before the month, every dividend we received was generally under $1. There's some sense, Now the payments are starting to grow, and I expect every third month is going to set a new record going forward. Here's how this played out. On March 1st, we received dividends from Aflac in the amount of 76 cents and Kroger in the amount of 87 cents. On March 8th, we received a dividend payment of $1.24 from Amgen. March 10, we received a few dividend payments. We had Chevron coming in at $1.33, Snap-on paid out $1.04, and Walgreens Boots paid us $1.84. And on the 14th, Agri Realty paid us 52 cents. This one pays out every month, and every month we're getting a little bit more out of this one. Think of Agri Realty as a smaller alternative to Realty Income, which I own in my Roth IRA. Now on the 15th, Next Year Energy paid me 88 cents. And on March 21st, I received payments from Main Street Capital in the amount of 90 cents and United Health Group in the amount of 54 cents. The 23rd was a good day for the fund. We had $1.12 from BlackRock and $1.17 paid from Home Depot and $4.04 paid from the Vanguard High Dividend Yield ETF, VYM. By the way, for more info on VYM and other fine dividend ETFs not named SCHD, we put out a video a couple days ago highlighting some of my favorites, and VYM did make that cut. We also received 75 cents from Waste Management, making cash out of trash. And on the 27th, we received our SCHD dividend in the amount of $4.83. On the 29th, we were paid $1.89 from the Vanguard S&P 500 Index, VOO. We also collected 18 cents in interest. We'll take it. We also have a payment for April 3rd from ADP already processing, but that's going to go towards April's income. It's not included in today's summary. We're also still waiting on a 79-cent special dividend from Main Street Capital to hit. This was supposed to have been paid on March 28th. Waiting on these Main Street and Medtronic dividends is really my only complaint with the Fidelity platform. But it seems like it's like a 5 to 6 business day sort of thing. It's just the expectation you need to keep. So we brought in $26.17 in dividends. That's going to be closer to $27 once that final main dividend hits. The $26 is about 150% better than we did 3 months ago in December of 2022, when we brought in about $11. Now, June should also be another record-setting month. I'm hoping to see that bring in $50 in dividends for the month of June. Man, won't that be awesome? And of course, I will continue to share our progress as we build up this fund. Someday, this is going to help pay my bills. So that's where the portfolio is right now. Q1, behind us, we brought in $36.40 in dividends in Q1. 26 of that is in the month of March. We're on track to crush our goals. By the summer, this should be a 5-figure portfolio. By the end of the year, we should be cranking out $400 in dividend income annually. And we're just getting started here. If you want to support the channel, I have partnered with Seeking Alpha to provide their premium membership at a discount to our viewers and subscribers. You can sign up for a free 7-day trial to try it out first. And after that, you pay $99. That gets you access for 12 months. That's just $8 per day, and I do a lot of my research on this site. And next time I'm going to show you guys their portfolio view, how I can put this into their system, and shows us some really cool stuff. And also the articles they provide alone. I think that makes it worth the cost in my opinion. And if you stuck around this long, you are my people. I appreciate you. Make sure you like this video to help me out in the algorithm. Leave me a comment. Let me know what dividend stocks you bought in the month of March, and of course, make sure you are subscribed, please. My next video is going to cover some of my favorite picks for the month of April. I'm also working on a Roth IRA investing update that's going to cover Q1 and the REIT I purchased in the month of March. We're also buying SCHD in that account every single Monday. And I'll go over some of the changes SCHD has gone in that video as well. Lots of work for me to do, so thanks again, folks, and until next time, keep investing.